This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report podcast highlights for the week of October 4th, 2021. Another volatile week in the global markets that eventually concluded with the latest U.S. jobs report and more hints at stagflation. What is stagflation? A stagnant economy, no economic growth, but also inflation. And a big part of that inflation story is a bull market in commodities. As commodity prices go up, manufacturers have to pass those costs on to their consumers. Otherwise, their margins get squeezed. So higher commodity prices lead to inflation. And check this chart that I found on Twitter showing a breakout in the Bloomberg Commodity Spot Index. Okay, this measured about 25, 27 different commodities, and as you can see, it is moving to new all-time highs, higher than 2008 and higher than 2011. This is a new bull market in commodities that will impact the precious metals as well, and that was a topic of discussion on October the 4th. Silver, too, like I said, $22.67 up 14 cents, and it was across the board, all the commodities soaring again, and natural gas moving higher. Crude oil, highest level since 2014. And with that, as you see here, the very first chart on this page, the Bloomberg Spot Commodity Index, which is like 27 different commodities, from metals to grains to, you name it, energy. Bloomberg Commodity Spot Index, highest close, highest all-time high close today. How about that? Now, will it just pull back? Well, we'll see. We got up close to this 500 level back in 2008. Remember when crude oil was $150? Fell back, got up again there in 2011. And it was that high today that we eclipsed. So when people say, oh, it's a commodity bull market, no, it's not. It's just $1. Okay. Check it out, man. This index has almost doubled since March of 2020. Of course, at TF Metals Report, we look at the precious metals every single day. One of the charts we took a long, hard look at on Tuesday, October the 5th, was the daily chart of COMEX silver. You had that breakdown below 22 that lasted about 36 hours last week, and it looks like a stop hunting run by the bullion banks because now prices turned around and moved higher. You can begin to see what looks like a reverse head and shoulder bottom forming. Well, we don't want to get ahead of ourselves, but at least that was an interesting topic of discussion on Wednesday, October the 5th. And I've known Ken Lewis now, the CEO of APMEX, 3 or 4 years, and he's just a good dude, and they're a very good company. Well, anyway, yesterday I was conversing with Ken by email, and he sent me some updates on retail demand. This is straight from the horse's mouth. Now, again, is it the supply and the demand of physical metal or the supply and the demand of the derivative that moves price? Well, we know it's the derivative, but nonetheless, physical demand is ultimately the key to breaking the backs of the banks. So anyway, I asked Ken to tell me what he's seeing. Here are some of the bullet points that he emailed me. 1, silver demand. This is Ken's words, not mine. Silver demand is as high as we have seen since the 1st of February silver squeeze. I have to go back to the first half of 2020 to see demand that this was this high other than during the silver squeeze. For perspective, we look at our ratio of gold to silver ounces that they're selling. That ratio is up 40% from the previous 60 days and up 60% from a normal month. So they're really selling a lot of silver on that drop down below 22 last week. Point 3, large orders have been disproportionately significant. I highlight this as we know ETF outflows are high right now and have seen in the past that large buyers tend to be ahead of the curve. Okay. And then 4, final point, the product mix also appears to be changing, but part of this is that we are in stock on a much broader range of product. We are seeing heightened demand for coins, Eagles, Maples, Krugerrands, Brits, whatever, as well as 1-ounce rounds. I can believe this is partly due to premiums, which are low and as low as they have been all year. Although I predict you will start to see premium increases if demand continues, as we are quickly moving through inventory and many mints start to ratchet down coin production in preparation for 2022. So there you go. If you're going to buy some rounds, and if you think price is about in, might be time to do it. Another item we have to track almost every single day is the U.S. dollar index. The computers are programmed to buy and sell COMEX digital metal futures off of every uptick and downtick, it seems. And so while it's not a direct one-to-one correlation over time, movements up or down in the dollar index often provide either a headwind or a tailwind for the precious metals. So we keep a close eye on the dollar, and that was a topic of discussion on Wednesday, October 6th. Let's start with the pig. Again, rallying today at one point up 60 cents, finishing up about 40 cents. The candle should be green. They had a little data issue, I suspected, bar chart this morning. Whatever, I'm not going to worry about that. Clearly, we are in a channel here. Now, look, the last time I drew this, I started it 3 days earlier, back in a few days earlier in June, where the big green candle that starts at 90. The more I looked at it, I didn't think that was right. This, I think, though, is a fantastic channel, and this is what we're going to go with going forward. Again, we're starting this on June the 16th, the day of the June FOMC, when everything first started getting sideways for us, at least in terms of the last 3 months. Okay, then we also draw the red line off of when we peaked, Wednesday, Thursday, Friday, okay, of that week. So now if we draw two parallel lines, starting with the blue one, catching that low back after the most recent BLSBS on September the 3rd, and then draw a red line that's parallel. Look at how perfect that is. Okay? The dollar index has come up and exceeded this line, 5, 7, 8 times? On an intraday basis, but never closed above it. So I think this is a fantastic channel to monitor. Getting very close to that level again today before falling back. Could also say maybe we're in the process of making a short-term double top here. Notice that when we peaked out last week at this same 94.40 or so level, again, brushing up against the top part of the channel. Remember the RSI that day was 73. Now here we are again at the same level with the RSI of 65. That's what David Brady and all other technical guys would call a negatively divergent top or higher high. So you could make the case, look at this chart, the dollar's about to roll over again. Now will it roll all the way down to the bottom of the channel, which by the time it would get there would be 93, maybe slightly below there? I don't know. We'll see what Friday brings. If it did, it'd sure make life easier for us. So we'll keep a real close eye on that channel and that chart going forward. Our Thursday conversation this week was with Rob Kirby, macroeconomic analyst at Kirby Analytics. Rob is always a fascinating guest, and those Thursday conversations are always free at TF Metals Report. So if you find yourself out in the yard this weekend, maybe on a treadmill or going for a long walk, stop by the TF Metals Report homepage, click the link, Thursday conversation with Rob Kirby, and have a listen. I think you'll enjoy it. And then on Friday, we closed the week with the latest U.S. jobs report, which at TF Metals Report we call the BLSBS. The initial reaction to what is clearly a building stagflation was a move higher in gold and a move higher in silver, but of course, bankers weren't going to allow that. And as we record this late in the COMEX session, it looks like gold is going to finish about flat on the day and about flat on the week, around 1760. Silver's had a better week. Silver's up about 1.5% on the week, and that'll be your final chart for this week's podcast highlights. Silver again holding 22 on a weekly basis. This is the fourth week in a row that we've kind of dallied with breaking down, but silver has not. And so now we look to see if maybe it can recover. A couple of previous times in the last 15 months, silver's come down to 22 or 23, 24, and then bounced. Now here we are again. The trend line is around 23 next week. We got up close to there today. We'll see what happens next week and the weeks after that. A lot of it's going to depend on the dollar. So we'll have to watch that closely as well. But at least for now, silver looks like it's holding 22 and is still in the bull flag formation that began, like we said, a little over a year ago. Thanks for listening to the TF Metals Report podcast highlights. Have a great weekend. We'll talk to you again next week.